Good morning, everyone. Hope you can hear me. Chris with the Chart Patterns Mastery / Simpler Trading Beyond, talking about market outlook. So what I want to tell you in here, in the Chart Patterns Mastery room, we play it a little different than a lot of other sites. Number one, we can try to consistently make money. So yesterday we were 5 for 5. So now it's not, you can size it according to your account, but for a tiny account, we made like $140 on 5 for 5. No drawdown. So we don't take shots. We don't take shots on earnings, other than if we do a butterfly or something, if we see unusual option activity. But that's the way we trade. So yesterday it wasn't 140. I forgot XSP, which is a tenth of the SPX we made money on. Today we took our 140 profit on another XSP. We lost $14 in a spread in something, and the other ones were coming out fine. So just, we try not to have big drawdowns, but we don't have home runs. Not usually. There's times when I'll find it, but we don't have it right now. So that's what we do. Now, I want to go over a number of things we do and a number of scans that I thought you'd find helpful. Number one, I don't like buying overbought markets. I don't like buying overbought markets where it's too far from the 20 moving average. I'll give you some, for instance, Coinbase, too far from the 20. Tesla, too far from the 20. Now, don't get me wrong. We have spreads we just initiated today in Tesla because we like it, but we liked it at the arrow. So you get like a bull flag action. I'm not going to give you a specific trade, but we liked it there. In fact, I said that was the best looking stock on the board. But we like when things revert to the 20 and retain a bullish structure. That's the way we try to trade. So I just want to let you know that that's what we try to do, to see if something gets overbought, works off the overbought by retaining a bullish structure. Now, that can be on a 1 minute, a 5 minute, a 15. And also, I bet that turned into some kind of squeeze. And I'll show you some of the stuff we're looking at. So the first thing I wanted to show you, because a number of people asked, we were talking about the warning sign of the yields going up. Well, why did the bonds rally today? Actually, we called that. I didn't do a trade in the bonds, but why did the bonds rally? Because Powell came off a little more hawkish when he had some conference this morning. The key in there is, if he's hawkish, that's good for inflation. And guess what? Yep, DJCI down. That's the commodity index. Good for the long-term bond. Long-term bonds hate inflation. That's why if you talk about fire and just blindly lowering rates, that bond market's going to get destroyed. So with him a little hawkish, let's see what Trump says about that. But basically, that helps the long bond. And also the long bond was at support. And you had the commodity selling off. There is a real direct relationship between the commodities and the bond market. That is something just you should know. So when you look at the commodities over here, the Dow Jones Commodity Index and the long bond, what are you going to notice? The commodities got nailed today. The long bond went up. That's the way it works. So when the bonds got nailed here, the commodities went straight up. So it does work. Now, this is the next thing, and a lot of people get this wrong. So I hope a lot of you know about buybacks and me harping about it. So I hope you know that. So the key is that companies voluntarily don't buy back stock the 5 weeks prior to earnings. They also, by SEC rule, cannot buy back stock on the opening or 10 minutes, the last 10 minutes. Now, you might ask, why did the markets, yeah, Jonathan, great question. So the thing is like yesterday, why didn't the markets go down on the close? Well, you had a lot of, let's say, PPI was coming out, but there was $5 billion to buy. It just didn't work. I mean, that's the thing. We didn't do a trade. There's a time and a place to do the trades. It just wasn't there. So we backed away and didn't do a trade. But this is how I look at it. Go and look at Apple. And I did a long video for our premium subscribers last night to show this. So on the left is going to be the SPX, because I want to show you when the buybacks are. On the right, I'm going to show you Apple. And the reason is Apple usually coincides with the end of the when the end of the buyback blackouts. So they're usually a relatively late earnings. So the preponderance of stocks report earnings in this area. So you can take JP Morgan, which is one of the earliest. So theirs is April 14th. You take 5 weeks prior to that, you're into March 10th, and the markets went down. Buyback blackouts does not mean markets go down. It means negative divergences, bad news, or bad charts are more likely to work. But the reason I'm showing you Apple in here, so there's your earnings. The buyback blackout, usually companies start buying back stock. The preponderance of S&P stocks can start buying back stock in this area, right in this area, right there. That's why I think markets are going to rally until the next buyback blackout, or let's put it this way, the sell-offs are going to be truncated. That's the way I look at it. The sell-offs are going to be truncated, like today. So even if you have the yields going up, you're going to see that buyback blackout thing, you see that when they started buying back. So you can take Apple here, and then you can take the SPX. You can take the same dates right in here, and you'll see that this is when a preponderance were buying back stock. Just take it in there, the end of April. So just take the end of April and go into here, and this is when the preponderance start buying back stock right here, which corresponded to the markets rallying right in there. Now, I know that's where Marjorie Taylor Greene bought 50 different stocks. Well, that's not buybacks. That's just Congress. But this can go on for a while. And what I wanted to show you is when I talk about it going on for a while, go and check this out. So here's the TNX. Here's the 10-year yield. And on the right's the SPX. You're going to see that, a lot of people worried about the yields back here and here. Yield spiking. You heard it. If you go back to news, you'll find it in there. But what are you going to notice with the S&P? This was November 13th. This didn't go down till the following month. That's when buyback blackouts started. This spike was January 13th. The markets didn't sell off till February 20th when the buyback blackout started. So it lagged by about a month. So now you have this where you have the spike and you don't have the markets going down. I didn't expect them to go down. Because of buybacks. And that's exactly what happened. So right now, what do I see? I see that this can go on for a long time until blackouts. Now, you might say, does that mean every time that they buy back stock, markets go straight up? No. But what it means is that they can keep going even with divergences. That's number one. Number two in here, if you wonder, how do you know companies are buying back stock? Now, what's funny is I was on Yahoo TV last Friday, and I said, just go to Google and put in 500 billion buyback. Yeah, that was a big faux pas. I corrected myself and said, no, Yahoo search. But look at that. Buyback spree. That came out last week. So that's why buybacks are more important now than they were, because they're saying they're going to be buying it back. So, I guess I should have said Yahoo search. Big mistake there, but that's the way it goes. So what else are we watching in here? Well, like I said, when you get buybacks, sell-offs are going to be truncated. Doesn't hurt to have the bond market rally over here. Now, you might say, well, why isn't the Russell rallying? I thought it's interest rate sensitive. Well, it probably will kick in gear later. That's what I've seen before. It just kicks in gear later. So that's what I expect. So that's what I see. So in there, that kind of thing. So like I said, when you see this time of year where you get buybacks, and if you're wondering, every company is different. Most of them voluntarily don't buy back stock, but they've already said they are going to buy back stock when they can. So now's when they're buying back the most, and that's why you're seeing markets react positive for any reason they can conjure up. I mean, that's how it looks to me, for any reason they can. And that's what you're seeing. So now what do we do? Well, number one, we look for bull flags and bear flags. So I'll show and dojis and follow throughs and all that. When you're in the buyback blackout, you got to find bull flags too. So you got to find both parts. And like I said, Tesla does not have a buyback. So Tesla does not have a buyback. And that's why a lot of times Tesla will underperform on the days the other ones outperform. What's outperforming? Yeah, Microsoft, Netflix, Meta, Apple. Yep, they all have buybacks. Tesla doesn't. But, it's just that it was extended. That's all. No more, no less. So, and I'll show you the next thing. So, number one, if I'm going to short a stock in the buyback blackout time, it's got to be a stock that isn't buying back stock because they're in their buyback blackout. You're going to have a lot of stocks that are in the buyback blackout while the other ones are in the buyback are going to underperform, or you're looking for reversal patterns. So if I'm going to short something, it's got to be a target. And that's the next thing. This is a doji. A doji is an indecision candle. I don't care a hill of beans about a doji. I care about the follow through the next day. As you see, the follow through was to the downside. So you're going to see it got to the gap. It was overbought and it had a doji and then followed through. That doesn't mean it's going down the next, later because it's near support. When I look for a big swing shorts, I want lack of support on the way down, like here. So, but there's a doji and a follow through. Now you might ask, well, did it have an intraday chart? So after the doji, you could jump in it. So let's show you. So in this type of market that's extended, if I'm going to short anything, I really would rather go for stocks that are already in a downtrend and already have a follow through. And vice versa if things have uptrends. So target, like I said, a bear flag against support is not to be trusted. So too many look at trend lines, bull flags, bear flags. You got to respect price support. That's a ton of price support. I would not go near it. Like I said, I don't take shots on earnings. So I've seen about a 10 to 20% success rate this year on all the sites I watch, taking shots on earnings. So I don't take shots. Going back to it. What did this look like on a 15-minute? Well, right here, that's not cut and dry. It wasn't a tight pattern. That's why we didn't play it. It just wasn't tight enough. Hourly chart, not tight enough. So we didn't play it. But as you see on the right, why on earth would I short it here with all this support? So the other thing, when you're in the buy, when everybody can buy back stock, not target, but when everybody can, if the markets go up, it's going to make these bounce. The other thing, you had a lot of other stocks in the group bounce. You had Home Depot. You had Costco with a massive bounce. If they bounce, I'm not shorting a retail stock. So that's the way I look at it. And that's where I am right now. But let me show you on how I scan for these. Number one, when the market's sort of waffling down, heck yeah, I'm going to look for what has a bull flag. So if you're just temporarily overcooked on the markets, just temporarily overcooked, like I said, doji in the follow through on a closing basis. So it hasn't followed through to the downside. And like I said, the follow through to the downside is much less likely if you're in the buyback time. And as you see, that's what happened. It didn't follow through to the downside. We took profits, thank goodness, on the opening. Now, why'd we take profits on the opening? Because of buybacks. So go and check out Netflix if you don't believe in buybacks. What was the low today? The absolute low today. Take the 15th. What's the low? The opening or close to the opening. Why was that the low? Because they're not allowed to buy back stock on the opening. So, or 10 minutes within the close. So amazing how that worked. So fascinating. So just want to let you know that. But now, like I said, there's going to be bull flags and bear flags. So when you're in an overall uptrend, but you have a little torque to the downside, sure, you're going to look for some bull flags. Now, if the market was in a big old downtrend, you're going to look for bear flag, because when it's doing this, some stocks are just going to do that. They're just going to refuse to go up. Just like now, when you sold off, there were some stocks that refused to go down. Go and look at the bull flag of Netflix. Now, I didn't play it. I'm not going to say we played it, but there's a bull flag and there's a bull flag. So it was there. I didn't play Netflix. I regret I didn't. So, but they have a buyback. So bull flags are more likely to work. And on a daily chart, it looks pretty good. So that's what we were seeing. So how do you find these suckers? Well, number one, I put it in here. Give me a second. So number one in here, I want to show you some of the scans. So like, I know a lot of people look at squeezes. That's fine. But keep in mind that a squeeze does not mean a bull or bear flag. It can be an extremely sloppy pattern. So if I see this pop up on my scan, yeah, heck yeah, that's a squeeze. It's probably a squeeze. So almost all bull and bear flags are squeezes, but not every squeeze is a bull and bear flag. But I also have up a ton of stocks so I can visually inspect them. So visually inspect. Did Tesla have a flag? Well, a flag today. Well, it had a flag on a daily. We know that. Did it have a flag on a 1 minute? It sure did. Look at that. And look at that. And look at that. So you don't buy on the way down, you buy on the consolidation. What else? It was over this ATR trailing stop. So a bull flag and an uptrend is more likely to work, even on a 1 minute chart. And it did. So that's pretty cool. So next thing I want to show you is actual scans. So a lot of times these scans work. Like I said, if the whole market's going up, bear flags are less likely to work. Simple as that. So, but let me just show you some of the scans. Number one, I love dojis and follow throughs. So I said, though, in an up market, dojis are not going to work as well on the downside, especially if you have a lot of support. But I'll just show you a couple of dojis. So here's one in Tesla. Right there. Now, I might have faked you out, but remember, it's in a downtrend. To me, that wasn't that much of a follow-through candle. So in there. But let me just show you, that's a doji. So, and it's not perfect, don't get me wrong, but overall, we found it's really helpful. Why is it helpful? Like here, if you shorted on the break, at least you have a backstop. You have a backstop right there. That's why I like to short on the way down, on the way up. So you have a backstop. Very important. So that's one thing. The next thing in here is, how do you scan for these? Like I said, I'm not here to go over gold or DXY and all that stuff. I'm here yet. But if I don't have a tell with them, I don't trade them. I don't fall in love with a stock. I fall in love with a pattern. DXY is not telling me a darn thing. Nothing. And also, I don't trade the dollar because I just don't see how you make that much money in it in the first place. It's moved $1 in the last month. Gold, I understand. I understand trading the markets. I mean, Tesla's moved 100 points. I don't know why everybody even looks at the dollar. We use it as a tell for divergences if we see them, and that's about it. But getting back to it in here, what else are we looking at longer term? Longer term, you got to say we're going up till with all these companies committing to buybacks. That's the way I look at it. As long as companies are committing to buybacks, you got to look for bullish patterns. The only problem in here is that things get too extended. To me, too extended is the 20 moving average. So usually with that, you get a reversion like you did here, where you try to come back to it. Now, the thing is, like I put on Stock Twits, I said that we were too far from the moving averages. They're like, well, why is it still going up? Because you don't have the reversal pattern yet. And like I said, when everybody can buy back stock, it's less likely to work. Everything we do is probability. So we're trying to be the house, not the other way around. So everything we're trying to do is probability. That's how we look at it. So the way I look at it in here is, you don't have any reversal pattern. When you're this far away, if it wasn't buyback time, I would look for the reversal patterns because they're more likely to work. Right here, lack of buybacks, reversal pattern, right there. Reversal pattern and a follow through. What the moral of the story? When you can buy back stock, the follow through to the downside is going to be truncated. When they're in a buyback blackout, the follow throughs are more likely to work. The other is, a follow through is more likely to work when it's in a downtrend. And I use a downtrend as the 50 move average or the ATR trailing stop. So a reversal to the downtrend, to the downside in a downtrend is more likely to work, and when they can't buy back stock. So that buyback stuff is a big deal right now. So that's the way I look at it. And I'm not taking a shot on the downside till I see a defined pattern. Now, if we were up 24 on the ES and the bonds were down another 30, then I'd take a shot. Is it too extended? Yeah. But if I'm even going to think of taking a shot on the downside, I have to take stocks that already are in downtrends. So, I mean, at least that's the way I'm doing it. And you can see it. I mean, like Microsoft. Is Microsoft extended? Darn right. We lost $14 in it today, screwing around with a butterfly. It's too extended, but it's got a big buyback. It's very frustrating. So if I'm going to play the downside, it's got to be in something that looks bad. So how do you find them? Well, the easiest way to find that, and I want to go through Doji scan, flag scan, and I'm happy to take a simple scan in this. FinViz. It's a real easy way. I haven't even logged in. This. I hate having pop-up ads. There. All right. So we take screener. And I'll take active stocks. So let's say over 500,000. Over 500,000. then all I'm doing is I want to take stocks. I put it up here. I want to take stocks that are over, let's say, 50. So let's take stocks over 50. So we're taking active stocks. And I pop up ads according to my search. I'm glad it's not OnlyFans and stuff. It's like hotels and stuff, all the stuff I look at with my wife, thank goodness. And that means looking at hotels with my wife, not OnlyFans. Current volume, over 500,000, price over 50. It's going to be a boatload of stocks, obviously. So we know that, 500. But now we're going to take the stocks under the 50. The theory is not that, these are going to catch up to the whole market. It's that if the markets do go down, these will be the first to go down. So, I mean, that's it. That's the theory. So, and you go and take them, and you want to be sure they don't have buybacks. So you go and take the charts. So that doesn't tell me anything. So it doesn't tell me anything. Maybe BRK, he's retiring. So they have a big buyback, but they said they're not buying back stock. They have a big old cash hoard. So you saw Lockheed roll over. You see TMO. This was actually on our video about a bear flag. So you were asking about bear flags. Well, it had a bear flag. So it's hard. Well, it did on back here. A little late now. But the point is, if the markets do roll over, you want to take the stocks that are already acting poorly. And you saw it with the healthcare. You saw it with a lot of healthcare. So they were already rolling over. So the theory is they're going to keep going down. They could go down even if the markets soar. So, and if the markets go down, they'll be the leaders on the way down. So that's one of the ways. Now, the next thing, definitely I look for the doji stuff. I like looking for the doji stuff. So, and let me show you how to do it. Now, you can see there's a doji. There's a follow through to the upside. Now, you can find dojis on 15-minute charts too, I'm sure. So, but the key is the follow through. The key is definitely the follow through. So let me show you. So, and I'll show you what we're talking about. Yeah, don't say it too loud. You're right. But to be honest, the reason you're seeing hotels, we're thinking of going to Nashville, and I was going up hotels, but I hardly have any time to do it. So I got to do it after the close. But that's why you saw that in there. So, but with my wife, by the way. So getting back to it though, let me show you a doji scan. So I have a number of different scans. So on Thinkorswim, they have a normal doji scan, but it's only for that day. You don't want that day. You want to go back. So let me show you a neat doji scan. I can't share this in the YouTube live, but I'm happy to share it in the essentials. All we're doing in here is I'm taking all stocks. You don't have to take all. I have a main list of like 110 most active stocks. But if you want to do it like this, all I'm doing is this. I'm taking a doji scan and I'm looking back 5 days. That's it. Now, forget about weeklies. Well, we could, if it wasn't normal expiration, I'd probably put in weeklies. So I like to day trade this stuff. So we're into the all optionable, all stocks, a doji within the last 5 days. Now, you can add a lot more stuff to that. We can add bear squeezes, bull squeezes, under the 50, over the 50. But usually what I do is I just look at every single one. I'm not looking at 700. You got to add other stuff. So let's just take my main list and make it easy on you. So first thing, main list. 18 stocks with dojis in the last 5 days. Now, the thing to realize about this is you're going to get something like Beam, but it's a $17 stock. I just like having some of the biotech stocks in here. But if you take these, just take these and take RCL. This is a daily doji. Yeah, it sounds like something you bet on, but the daily doji within 5 days. So yeah, I'll share that in a second. Sure. There. So when was the doji? Doji was here. A little late, but at least you see it's in an uptrend, the follow through. Now, keep in mind that a lot of times, I mean, I'm just human like everybody else. When it comes to trading, I'll be watching every tick here and say, oh, it refuses to go up. Then the next goes up, you're like, oh, I missed it. When that was just the beginning. A follow through. So pretty, very, very interesting. So let me show you. So all I'm doing is taking my main list. Let me share that with you. Main list. And I'll tell you right now, you want me to get pissed off? Regeneron. I showed that as a bull flag today. But it was down, so I gave up. Go and check out this bull flag. There. Well, it's not tight, though. That's why I gave up. But it was down 5 points. I gave up. And it had, I'm not going to say that was a perfect bull flag, but now you see it. You see that came up on a squeeze. Here we go with another thing. So it was here. You're thrilled that you came out alive. You give up. And now it's probably a better buy. So I just want to show you that kind of thing. But getting back to it about the scan. First things first, main list. So I have a lot of stocks. Most active stocks are optionable. I put PX in there. So let me share that with you. First things first, so you don't have too many that pop out. Now, this is not static. So one day I might add Target. I might add the oils. I might add the golds. So I add all this stuff. I mean, it constantly moves, but that's it for now. Then you take the doji scan, you intersect it with the main list, and basically you can just save it like this. Main doji scan, main list. There, doji scan, main list. Pretty straightforward. Doji scan, main list. So now, like it's 20. Let's say it's 20. And I'll share that with you. I'm happy to share that in the Essentials room, not in the YouTube live. I can't. There. And like I said, you can change this around. So when you're day trading, maybe you take hourly dojis. So that's one way. Now there's a lot of other things you can do with this. But usually I manually inspect all of them. Once you save it, it becomes a watch list. So you go over here to Doji Scan. There you go, main list. So they pop out. So they pop out. So what are you seeing in here? By the way, chart patterns mastery. I haven't decided yet, but we might want to take a profit in Tesla, just so you know. So, but that's what I'm doing. So just in there. So let me show you some of the results. So we're just going to go to Doji Scan. And you're going to see that that doesn't mean something's going down. So it's all about the follow through. As you see, uptrend, follow through from the doji, like I mentioned. Cyberonics, nothing yet. That's going to be interesting. Nothing yet. McDonald's, well, you had a doji here, you followed through, but it's at support. One of my biggest things is caring about price support and resistance. I just can't stress that enough. Extremely important. So a follow through that hits support is not to be trusted, on the downside. So there's a lot of things to consider. This had nothing on the way up. The Vive, well, you see what I see. Indecision. Above here, you got the resistance. If it followed through down, you got all the support. That's a perfect butterfly candidate because it's stuck up here, it's stuck down there. Perfect butterfly candidate. So let's find some more. How about take two? Well, you see the follow through. So you see why it stopped. So that's not bad. That's a pretty good trade. It's the follow through candle. So that's where you hear a technician, it probably annoys you that it's a better buy here when it decisively follows through. But that was a good 4 points. Doji was back here. Why didn't it work? Big support. I can't stress enough that you have to appreciate where support and resistance is. And before you say, well, how do you know where support and resistance? Just take price bars. So prior ties become support. And here's another one. Prior highs. Prior lows become resistance. Another perfect butterfly candidate. Because it's stuck. Because a lot ask, how do you know which ones to do butterflies? I like when they're stuck in a range. That's what I like. But I like when they're stuck in a range. And that's the problem with the overall market. Is the market stuck in an overall range? Well, you buybacks are going to help. So if you saw a doji now on the follow through, yeah, there's an air hole, but it's in an uptrend. It's a lot different than an indecision candle in a downtrend. So, and one bar is not support. Multiple bars are support, like here. So I just can't stress that enough. But Helen, you were asking about that. How about an hourly doji? So if this is up 29 and something has a doji and is starting to follow through to the downside and in a downtrend with no support, yeah, maybe I'll mess with it. So not extended. So 39 stocks have an hourly doji in my main list. So let's take Visa. Now, why does Visa have a doji? This is an hourly. This is not a daily. Why does it have a doji? Well, because it hasn't built yet. It's still within the hour. Now, that's not fair. So, but, just so you know. So is anything else? Well, you got a lot of them. So, you have a lot of them. Let's take Darden. That doesn't tell me a thing. I don't really want a doji this hour. I want dojis other hours. And like I said, if you see a doji and a follow through, you better respect support or resistance. So now here's a fake out for you. Look at this though. So you might say follow through to support. but then it had a breakup against resistance. Yeah, and it was in a downtrend. So I'm just telling you, you really need to, it's not a magic bullet. You need to combine it with a lot of other things. So at the moment, I don't see the trade at the moment on the downside. Now you might say, how about Tesla now? What's it look like on a daily and an hourly? Like I said, it looks okay. It's futzing around today, probably because of big open interest at 350, probably because of resistance here, but also because it's too far from things. It would be healthy if it sat here for a couple of days. So the 20 catches up. So this gets back near the zero line like it did here. So I'm just telling you, that's how we're trying to do it. And by the way, another thing, we try this, but right now, when you're in a buyback time, like I said, sell-offs are truncated. So if the market's doing this, sort of doing that, but you're watching the Microsofts and that big buybacks and the Meta's going up. Oh, well, Meta's going up now, but Apple and let's say Microsoft. Then I'm going to look for stocks that are forming like bull flags. So Helen, first thing was the dojis. Next one is show you the bull flag scanner. So all a bull flag scanner is looking for a contraction volatility in an uptrend. So here's a good bull flag scanner. Now, on expiration week, a lot of the cheapies don't have weeklies, but they're worth playing now because they have cheap options. We were playing the what were we playing? Yeah, at 50. Wait. Yeah. The idea is you get a lot of bang for your buck. We were playing the 3.5s for this week at 20 cents. Now, it might not sound like a lot, but you buy 10 of them, you make $300. I got one. So nothing to write home about. But we got one. The key is all these small stocks, could have downside risk. If you could buy cheap options, great. Why did this come up? Because it was a squeeze. So let me show you a squeeze scan. Now you can do a squeeze scan on a daily. And all I do is I usually try to reverse engineer it. I'll show you. All I do is reverse engineer it. I look at what would have worked. What popped out as a bull flag. And then I change the scan. For 1 hour, bull flag. Look at that. Did that have a 4-hour squeeze? No. So I'm looking for 1 hour squeezes in an uptrend. So a consolidation, and it's over the ATR trailing stop. So if the market goes down, but they retain a bullish structure, I'm going to look to buy them. So let me show you how to do it on how I'm doing it. So I took this, all I did. We took a 1 hour squeeze scan. It's a good way to try to find cheap options. So you take 1 hour, small bull. So, but you can have a longer term uptrend or an hourly for a shorter term uptrend. We took cheapies. We were looking for cheap options. You can change that all around. We want ones that are relatively active options. What pops out? All stocks, all optionable, at least $2 to 200, active options, active stock in an uptrend on a 4 hour and a squeeze on a 1 hour. Yeah, 200's a lot. Now that's going to be tough. So let's take an hourly uptrend, see if it changes. So 210. Now, that's a little too many for me. But let's just look at some of them. Let's take cheapy. All right, let's take something strike. So near its strike. So, how about PAL? They make like ammunition. Twos, there you go. But it's on a Thursday. I wouldn't do it on a Thursday. You want to do it on a Monday so you have a little more time. But that's your idea. Charts. Bull flag. Well, a little sloppy, but still you see it. So, take them near the strike price. Like I said, on a Thursday, it's a little rough because you have to be perfect and you only have one day. But take like Lithium Americas, LAC. That's not fits my criteria. That's a lot of bad grammar. A squeeze, but not a tight pattern. But if it popped up here, there you go. So if it came up, then I have to visually inspect if it's a squeeze, and those two are. So here you go. There. And like I said, when you're looking at this, let's say I'm bearish, then I want to find something that's in a downtrend. And you change that. That's all you change. So if not now. I'm just saying eventually. But go and take this and go and take bigger stocks. Take a 1 hour squeeze. You're not going to see many. Active stocks. Now, if I'm going to short, you want them real active. Probably 700,000. And then you go into here, Helen, and you go into that. And the condition, you change the less than or equal to. So now you're finding a consolidation under the ATR trailing stop. So you can make that a 4 hour. I mean, if it's under the hourly when the market's soaring, you're probably, it's real weak. So let's see. 12 stocks. That's it. That have an hourly squeeze under ATR trailing stop, or any of them stocks you know and love. Probably PGR. Let's see. Oh, there you go. There's a criteria. A squeeze and a possibly bearish pattern. Look at that. In a downtrend. Now, I'm not playing anything on the downside at the moment. But if it wasn't buyback time, I'd be looking at that. A bear flag in a downtrend. Now, I probably would go to a daily to see what it looks like. Yeah. At resistance. So it's in a bear flag in a downtrend. I'm not playing it. I'm just telling you, it popped up. And like I said, buybacks all matter on the stock. That's what I was showing. And I was showing when a preponderance of them don't buy back stock, it's between JP Morgan's earnings and Apple's. Well, really when JP Morgan's earnings start. So it's 5 weeks prior to JP Morgan, and the maximum buyback blackout is probably about April 28th. That's what I was showing earlier. So in fact, in here. But here you go, Helen. There's one that popped up. If I was bearish on the market, the first ones I'm going to look to short are the ones that have bear squeezes on an hourly. So let's find some more. And like I said, I'm not shorting a darn thing here. I'm just showing you for instances. Let's take Tradeweb. Now, that was a good stock. You see what I see. A break and a bear flag. Now, why wouldn't I play this? Number one, markets look great, but it also is a bear flag at support. It's not to be as trusted. You want lack of support on the way down. I call it an air hole. So, but that's what you're looking for. If this didn't have that and the markets look bad. So, I mean, you see it. Consolidation reflected in a bear flat and a squeeze under the ATR trailing stop on an hourly and a consolidation. But you have to manually go over these. But like I said, if the whole market's going, it just isn't the right time to screw around like this. You can take ICE. Now, you might say, why are these going down? They're going down because people feel the volatility is going down because the threat of the tariffs, it's a little better than they expect. But here's another one. Oh, Helen, it's fine to ask. It helps me. I appreciate you being engaged on this, and that stinks about the reinstalling it. But maybe you have it on a different computer and you can share that workspace. So I have it on here. I have it on my wife's. I have it on a different computer, and I have it on a laptop. So I try to have like a lot of different places. So if one of them crashes and wipes out everything, I can just reinstall it from another one. I hope that helps. But getting back to it, that's what you're looking for. Like I said, I'm not talking about doing anything right now. I'm just showing you for instance. It popped out as a squeeze in a downtrend. And this one at least has no support. So the theory is if the market started to look bad, this would be one of the first to go down. If it broke here, that's a nice bear flag. So, but like I said, the markets look too good to jump on that kind of idea. So that's what I mean. So that's where I am right now. Like I said, the markets, this buyback stuff makes a big deal, is a big deal. Not always, but it is when companies already have announced they're going to buy back stock. That's why I'm obsessing about it. Because the more they're buying back stock, the more it doesn't take a lot of news to move things up. Now, you might say, yeah, but the Russell's only up that. The transports are only up that. Yeah, there are divergences. But one thing to keep in mind is the Russell stocks have less buybacks. So that's where I am. So what else am I doing? Well, I'm not touching Coinbase. Guess what? They don't have a buyback. And they had a lot of crap news. So I don't know who's trading Coinbase, but they had all kinds of controversial news. So I'm not going near Coinbase. Dick's Sporting Goods, we looked at as an arb play of buying it because they're buying out Foot Locker, but it just never looked good. So we didn't buy it. So we didn't mess around with it. So let's put something else up here. What do you like? Visa. There. So that's what we're watching. So the point is that there are divergences still. Don't get me wrong. Russell is underperforming. Transport's underperforming. But divergences are less likely to work in buyback time. So, Mitch, let me show you this because it's a great question about the buyback stuff. And I want to show you a big chart. I know I showed this before, but I love showing it. So you take off everything. And it's not perfect. Don't get me wrong, it's not perfect. But you're going to find that that bad news is more likely to affect stocks when the preponderance of the SPX stocks aren't buying back stock. So going at a cycle thing, like I said, I'm happy to share this. And you can see November's, yeah, that's when they start buying back stock right in here. And then you got the April, in there. Then you got, after Apple. So you got into there. Now, I'm not saying it's perfect, but right in there is where the preponderance of buybacks. Look at that. So pretty neat. So that corresponds to that area I was talking about. And like I said, it's not going to be perfect, but it just goes to show you that when they can buy back stock, bad news is less likely to work. So if you want this, Mitch, here you go. There, I hope that helps. So like I said, it's voluntary, number one. Number two, when you're in a buyback blackout, that does not mean stocks have to go down. To me, it means bad news or bad charts are more likely to work, or bad divergences. See right here? That was that whole yen thing. The carry trade. When did it start going up? In 2024, when they could buy back stock. And I know that's a broken record. I totally understand, but it's all about percentages. Because right now you might say, hey, we're higher than when they even announced the tariffs. Yeah, but that buyback stuff can make a big difference. That's the problem. So you got that right there. I think that's, it's a nice, handy thing to have. And you might ask, well, why is it handy? Because we were shorting JP Morgan when it was in the blackout. We were buying it when it wasn't. You're going to find this interesting. Let's go and put the drawings. Check when they buy back stock. Look at that. Yeah. Buyback blackout. Crap out. Crap out. Straight up. Straight up. Straight up. It's all about probability. The probability of making money on the downside goes down dramatically if they're buying back stock. Bottom, close to a bottom, 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 bottom. So when it gets to the buyback is when we look to do spreads above the market. If they have a bearish pattern and they're not buying back stock, we're looking to play things under the market. There's where we played under the market. There's where we played over the market. So I hope you find that helpful. So everybody take care, and I'll talk to you later.